The stock market continues to baffle us. If anyone told you last year that the S&P 500 to date would be up over 18%, no one would have believed you last year. In the past month, the S&P 500 has been making again record highs, it seems every other day, up by over 3%. The FTSE 100 over the past month is up by over 1%, and the FTSE 250 over the past month is up nearly 5%. So how has all this news affected my trading 212 portfolios? In this video, I will show everything. Now here is my trading 212 invest account, and as you can see, my portfolio balance is £17,622. If I go over to the top button here, you can see that currently I only have £4.81, meaning that I'm pretty much fully invested into the market. Now if you would like to receive a free share on trading 212, then you can always use the link in the description down below. Alternatively, if you've signed up recently and haven't received a free share, then all you have to do is press the menu button here, scroll all the way down, and there is a menu called use promo code, and in this menu you can use my promo code JUBAIR and you should receive a free share. So as you can see, over the past month my trading 212 invest account has been pretty much all over the place. At the beginning of the month I had a portfolio value of £15,688, and some of this was deposits, but the rest was just trying to time the market, as always, something that I never recommend doing. However, this is my trading 212 invest account and it sits outside of my ISA. The goal with this account is to hit 20k so that I can sell off my holdings and transfer straight into my ISA as soon as the next tax year opens. Now of course, like I say, this is not financial advice, this is just my portfolio. It will be different from other YouTubers' portfolios, so do bear that in mind. If you want to grow long-term wealth, then of course I'm going to show you. It's very simple, you just hold good funds and consistently invest into them regardless of where the market is heading. But in any case, it wouldn't be much of entertainment if I had just said that, so let's go through all of my holdings one by one and show you how I personally invest on my trading 212 invest account, and then I'll show you my trading 212 ISA. Now I'll go into the history tab first just to show you my total realized profit and loss. So I have been buying and selling quite a bit of ETFs, which I'll show you quickly here. Over the month of June and July is pretty much the S&P 500, and more recently you'll see it's in the FTSE All World. So since my last portfolio update, I think I put in around £1,500, so £1,000 in the 14th of June, £300 on the 28th of June, and £200 on the 8th of July. You can see that it says I have 23,000 in withdrawals. What this is mostly my transfer from my invest account to my ISA that I did last year, and then I did make one withdrawal and then I subsequently put that back in. So you can see that my deposits are always higher than my withdrawals. But anyway, let's go through my individual shares and I'll talk more about that. So in Walt Disney I have 0.12 shares. Over the past month, Walt Disney is down by 3.64%, which is of course not looking very good. You can see that in my portfolio overall I am still up by 3.68%. that is a minor 34 pence gain, and you can see that Disney does pay a small dividend yield of 0.78%. and if we go into the financials, just to quickly glance over this, I am not an accountant, sometimes I make mistakes and I have been told off by an accountant in my previous video, so I'm not going to go into too much of the details, but you can see that revenue does seem to be increasing from 2021 to 2023, and the net income does seem to be decreasing since 2022. So I don't know how well Disney are doing there, although 2024 figures aren't here yet. So in terms of balance sheets, you can see that the number of assets does seem to be higher than liabilities, at least on paper, but if you want to find out more, you can always go to more financials and see what they class as assets and liabilities, so that you can see, is this company really in a position to, weather out the storm of high interest rates, so on and so forth. Now in terms of cash flow, I have been told off before saying operating income, so I'm just going to go with the words operating. You can see operating has increased, and then you can see investing and financing look pretty similar. So next I have 35 shares in Vodafone. Over the past month, Vodafone has done pretty much of a yo-yo. It is up by 2.2% overall. Now in my portfolio overall, I am still down by 22.66%, and that is a loss of £7.25. It still says they pay a very high dividend yield of 10.77%, but I had thought that they cut their dividends, but in either case, that's what it says on Trading 212. It might not be the most accurate. That's why I always say do your own research outside, especially for these numbers. A lot of the times these numbers aren't up to date on Trading 212, unfortunately. They are my favorite broker, they have a lot of good things, but they have so much on their plate right now, and I can see why sometimes these figures might not be up to date with everything else. Just to let you know, I'm not sponsored by Trading 212 and I can pretty much say what I want, but you can see the revenue looks very high to me, and it seems to be somewhat lower than 2021 at least, and you can see the net income is lower than 2023. From the balance sheets again, total total number of assets higher than liabilities, but again, do your own research into this. And cash flow, we can see that, financing is quite high and operating seems quite similar to the previous years. Now, next I have literally just 0.01 shares in the S&P 500. £1 is not going to make much of a difference, but you can see over the past month, it is up by 2.28%. And the S&P 500 is constantly making new highs this year, and it is on a mad bull run. So we don't know when that's going to end or if it's going to keep continuing. So if you do want to grow your long-term wealth, this is one of the funds that I probably would invest in if I wasn't such a tool. You can see from the past performance over the past year up by 26%. So amazing fund to have held retrospectively over the past year. In either case, I'm pretty much break even at this. So I'm not sure what's going on there. The average price is 81.91. My average buy-in price was 81.91 and the current price is 82.25. I'm not sure how that constitutes as a break even. It should be in the negative, but I'm not complaining. So next I have 0.9 shares in the Vanguard Germany All Cap, and these small holdings are pretty much, you might think they're worthless, but they let me kind of track the market in a way that, if I had bought in that position and then never bought again, what my holdings will look like. You can see that over the past month, it is down by 1.89%, so not looking too good, but overall I am still up by 4.51%. And that is a return of 93 pence. So next is my biggest holding by far, and that is 154 shares in the Vanguard FTSE All World. Now this has become my new fund to try to time the market, just because I've realized just how volatile it is and the correlation it has with the S&P 500. This fund is 60% in the S&P 500 for all intents and purposes, 60%-ish into the USA. And what happens is there's a lot of correlation with the S&P 500, but sometimes it hits the opposite way. And of course, I don't recommend anyone to try to time the market, but for me it's fun, and I show you what I do on, my social medias. I've actually managed to buy and sell quite a bit of it recently, and I've made, about £100 in profit, which is really fun. But of course, if you're going to keep it for the long term, I do not recommend this at all. But in either case, since I bought it, which really was not a long time ago, let's just see when I last bought it. It was literally the day before yesterday I bought it, and you can see I am up. Well, I bought it right at the end of Friday, and of course the market's closed, but I am up by 0.05%, and that is a gain of £7.73. You can see that it closed very low at £104.65. So if it hits when the market opens £105.02, which is somewhat of an all-time high, then my market order then would execute, and I would be a happy bunny, especially if the price goes down afterwards, so that I can buy it again. Now next I have 0.17 shares in Tesla, and although I get comments, what's the point of holding such a small amount and not investing it again? Well, the thing is, these shares I've had for a very, very long time, and it was at a time where I didn't mind owning individual shares, but you can see that my focus has shifted towards actually holding ETFs, and I'm very impatient sometimes. I know you're supposed to hold it for the long term, but at the end of the day, I am still human, and these portfolio updates show you that I'm human. Trying to time the market is going to always be at the back of people's heads, and I know I will miss out on many of, the good days of the market, and I never preach to do this, but it is fun at the end of the day, and I prefer to just invest into ETFs, even if it's me trying to time the market with ETFs. So in any case, 0.17 shares in Tesla, over the past month, they are up by 40%, which is actually, frankly, extremely staggering. I can't believe that actually happened. You can see the last time, throughout the month, I was actually in the loss, and then you can see my average buying price is $210. It has superseded that greatly, so I'm very surprised. In either case, with Tesla now, I am up overall in my portfolio by 13.56%, and that is a gain of £3.93. They don't currently pay a dividend yield, and let's just go through the income statement. You can see the revenue has been going up. Balance sheets quickly, we can see total number of assets are going up. And from a cash flow, you can see here, I'm not going to mention anything, but you can quickly see this. There's not really any point of me actually going through it. I'm not an accountant or anything like that. So next I have 33 shares in Rolls-Royce. And over the past month, you can see that they have taken a tumble down by 4.13%. However, in my portfolio overall, they are up by a mighty 175%. And that is a profit of £96.18. You can see that my initial investment was very low. If you do 150 minus 96, it was a very low amount, but I more than doubled my money, and a £96 profit on something very low isn't that bad at all. Now, they don't currently pay a dividend yield, and as you can see from the income statement, revenue seems to be going up, so is net income. Balance sheets, you can see total number of liabilities, or the sum of liabilities, seems to be higher than assets on paper, and here as you can see quickly, is their cash flow overview. So next I have 2.13 shares in PayPal. You can see over the past month, they have gone down by 4.98%, below my average buying price of $61, and now I am at an unrealized loss. Now you can see overall in PayPal, my portfolio is down by 4.81%, and that is a loss of £5.01. Now they don't currently pay a dividend yield, and as you can see from their income statement, revenue has been increasing nicely, net income too it seems. From their balance sheets you can see total number of assets higher than liabilities, and here is a look at their cash flow profile. Now next I have 2.32 shares in Orange. You can see over the past month looking very good, up by 4.19%. In my portfolio overall they are still down by 13.03%, and that is a loss of £2.91. They currently pay a dividend yield of a really high 7.24%, and here is their income statement. You can see revenue seems very high, net income seems quite good, and from their balance sheets you can see the total number of assets, at least on paper, exceeds number of liabilities. And here is their cash flow. You can see the operating, investing and financing. So next I have 0.9 shares in Nvidia, and over the past month you can see they had a really big high of around $140, then they went down all the way to around $120, and then back up but not as high, up overall by 3.75%, and in my portfolio overall they are up by a massive 325%, and that is a real world gain, unrealized of course, of £69.45. Now they pay an extremely low dividend yield of 0.03%, and this is why they are one of the Magnificent Seven. You can see the revenue is growing near exponentially. Net income seems to have, more than quadrupled. Balance sheets, you can see assets are growing, and here is the cash flow. You can see operating is incredibly high. So next I have 0.4 shares in the troubled Nike. You can see that over the past month they are down by over 21%, absolutely doing hideously, and this is a lot to do with their pandemic plan of going all online instead of focusing on the in-store experience, and that kind of led to the downfall, because of course now after the pandemic people don't really want to buy all these sneakers, trainers, whatever, online, and they also don't want to pay those extremely high prices that it went to due to supply chain shortages. So yeah, Nike, you know what, you need to work on reducing your prices, maybe that will help. But in any case, they are down in my portfolio overall by 30.7%, and that is a loss of £10.16. I don't mind losing money on a company that I invest in that doesn't really speak to the people, that does really focus too heavily on profits. This is also why I don't invest in individual companies. If a company is being horrible to its people, then it kind of deserves, to go down in value, I guess. But in either case, they do pay a dividend yield of 2%. And here is the income statement. It does look like revenue is still really high, net income dropping a little bit. From the balance sheets, you can see total number of assets, at least on paper, exceeds liabilities. And here is the cash flow. You can see financing does seem to be, more in the negative. Next, I have 0.49 shares in National Grid. Over the past month, up by over 8%, looking very good. In my portfolio overall, still down by 5.24%, and that is a loss of 26p. They do pay a good dividend yield of 5.94%. And here is their income statement. You can see net income in 2023 seemed very high, and you can see revenue stayed quite high in 2024. Net income reduced, but it isn't the end of 2024 yet. Balance sheets, you can see number of assets higher than liabilities, and here is a look at their cash flow. So next, another Magnificent Seven contender, that is Microsoft, and I have 0.07 shares in them. Over the past month, up overall by 2.69%. You can see at one point they had a share value of $469. In my portfolio overall, still up by 13.08%, and that is a gain of £2.97. They pay a very small dividend yield of 0.64%. Not sure why these companies pay such a small dividend, but they do. You can see revenue increasing quite nicely, and from a balance sheet perspective, you can see total number of assets are increasing, and here is a quick look at their cash flow. So next I have 0.38 shares in Mercedes-Benz. Over the past month, quite flat overall, down by 0.06%. In my portfolio overall, they are still up by a very small 1.64%. So not the best, investment to have over the past year, as you can see, down by 9.87%. So this company hasn't been doing too well at all. I'm still up, unrealized by 1.64%, and that is a 34p gain. You can see from the income statement, revenue has been increasing, and from a balance sheet perspective, assets higher than liabilities. And here is a quick look at their cash flow. So next I have 343 shares in the Lloyds Banking Group. Over the past month, up by a nice 7.49%, and in my portfolio overall, they are up by 33%, and that is a £50 gain. They pay a nice dividend yield of 4.75%, and here is a quick look at their income statement, which doesn't seem full to me. And you can see from the balance sheets, number of assets and liabilities are quite close, but this is expected for a financial company. And here is a quick look at their cash flow. Next, I have 6.2 shares in Royal Mail. Now, over the past month, you can see they took a massive tumble until about the end of June, and then they seem to be in a nice incline, down overall since last month by 0.6%. In my portfolio overall, however, they are still up by 55%, and that is a return of £7.32. Now you can see that they do pay a dividend yield of 0.61%, and here is their income statement. Revenue seems to be high, but net income seems to be decreasing. Quick look at balance sheets, total number of assets higher than liabilities, although there seems like somewhat of a sell-off since 2022. And here is a look at their cash flow. Next, I have 23 shares in IAG. You can see that over the past month, they are down by 2.47%. In my portfolio overall, they are up by 14.77%, and that is a gain of £5.19. They don't currently pay a dividend, and you can see here from the income statement, revenue seems to be increasing quite nicely, and from a balance sheet perspective, assets and liabilities do seem to be quite similar, and here is a look at the cash flow. Next, I have 3.16 in H&M. Now, over the past month, not looking very good at all, down by 17.31%, and a huge tumble here. If anyone knows in the comments why that is, do let me know. Well, I guess this answered my question. The financial outlook not looking good. Probably they didn't post good profits, but in either case, in my portfolio overall, they are up by 6.47%, and that is a gain of £2.23. They pay a dividend yield of 3.82%, and here is a quick look at their income statement. Revenue does seem to be increasing since 2021 to 2023, although 2024 results aren't here yet. Balance sheets, assets, at least on paper, exceeding liabilities. And here's a quick look at the cash flow. Next, I have 0.29 shares in GlaxoSmithKline. Over the past month, not looking good again, down by 5.48%. And a huge dip here, probably something to do with profits or something like that. Not too sure. I don't analyze stocks, and I probably never will. In my portfolio overall, they are up by 14.11%, and that is a gain of only 56p. Now, they do pay a dividend yield of 3.89%, and here from the income statement, you can see revenue has been increasing. Net income does seem to be down here, and the balance sheets looks like there has been a sell-off of assets. And here is a quick look at the cash flow. Next, I have about 2 shares in Direct Line Insurance. Now, over the past month, they have tumbled under my average buying price of 198p. And you can see that over the past month overall, they are down by 3.37%. In my portfolio overall, they are down by 4.75%, and that is a loss of 19p. They do pay a dividend yield of 2.07%. And here from the income statement, you can see things are all over the place. And from a balance sheet perspective, you can see, at least on paper, assets do exceed liabilities. And here you can see from cash flow, what you want to, because again, I am not an accountant. So next, I have 18 shares in Deutsche Lufthansa. Over the past month, not looking good again, down by 7.09%. In my portfolio overall, not a great investment at all, down by 33.5%. And I've actually held this for quite a bit of time, down overall by £44.80, which kind of does hurt a little bit. Now, they pay a good dividend yield of 5.14%. And as you can see from the income statement, revenue has been increasing. And from the balance sheets, you can see number of assets and liabilities quite close for me. And here is a look at their cash flow. Next, I have around 1 share in Deutsche Bank. They seem to be doing a lot better, up by 2.3% in the past month. Now, in my portfolio overall, they are up by 21.48%. And that is a gain of £2.30. They do pay a dividend yield of 2.94%. And here is a look at their incomplete income statement. Balance sheets, again, neck and neck. And here is a look at their cash flow. Next, I have 1.5 shares in Delivery Hero. Now, over the past month, they have been doing incredibly bad, down by 28.8%. 8.48%. In my portfolio overall, down by 31.96%, and that is a loss of £12.31. Here is a look at their financials. You can see income statement, revenue does seem to be increasing, but net income still in the negatives. And here is a look at their balance sheets. Also looks like the number of assets are decreasing. And here is a quick look at their cash flow. Next, I have just one share in Carnival. Over the past month, really good, up by 9.66%. And in my portfolio overall, they are up by 84.86%. And that is a gain of £5.94. They pay a dividend yield of 3.08%. And here, from the income statement, you can see revenue has been increasing quite a lot. From their balance sheets, you can see number of assets and liabilities are quite close. And here is a quick look at their cash flow. So next I have 21.06 shares in British Petroleum. Over the past month, down overall by 2.45%. Now in my portfolio overall, they are up by 13.69% or down by £15.15. Now they do pay a good dividend yield of 5.06%. And as you can see from the income statement, revenue does seem to be quite all over the place, not quite the glory days of 2022 when they were literally ripping everyone off. And here is their balance sheet, again quite high number of liabilities, but number of assets, at least on paper, does seem to be higher. Here is a look at their cash flow. So next I have 0.37 shares in BMW, and over the past month up by 2.13%, but again not a very good stock to have held over the past year or two, down by 13.89%. In my portfolio overall, down by 9.78%. That is a loss of £3.15. They do pay a high dividend yield of 6.7%, and here is a look at their income statement. Revenue does seem to be increasing. Here is the balance sheets, number of assets, at least on paper, exceeding liabilities, and here is a quick look at their cash flow. Next I have ASML, 0.02 shares in that. Over the past month, up by 1.68%, and as you can see, the share price has exceeded €1,000, which is absolutely crazy, and there might be a stock split soon, although I'm just saying that, I don't know. But you can see my average buying price was €669, and many of you looking at the graph might have thought that was the peak, but it really wasn't. In my portfolio overall, up by 46%, and that is a gain of £5.61. Now they pay a very small dividend yield of 0.62%, and here is a look at their income statement. You can see revenue growing near parabolically. Here is a look at their balance sheets, again assets growing quite well, and here is a look at their cash flow. So the next four holdings that I have are all part of the Magnificent Seven, and if my math's correct, I think I have pretty much most of them. But anyway, 0.42 shares in Apple. Over the past month, up by 8%, which is really good. In my portfolio overall, up by 25.36%. That is a gain of £15.34. They pay a very small dividend yield of 0.44%. And from the income statement, you can see revenue is very high, and you can see also number of assets does exceed liabilities, although you can go into the breakdown and you'll see a lot of their liabilities are not anything to worry about, because they do service quite a lot of debt. Next, I have 1.2 shares in Amazon. Over the past month, Amazon doing quite well, up by 4.09%. In my portfolio overall, up by 78.91%. That is a gain of £82.48. They don't pay a dividend yield, and you can see here is the income statement, revenue looking quite good. And from a balance sheet perspective, these companies, their balance sheets are pretty much impeccable, so there really isn't much of a point actually criticizing them. And here is their cash flow. Next I have Alphabet, 0.47 shares there. Over the past month, up by 3.89%. In my portfolio overall, up by 36.44%, and that is a return of £17.96. They pay a very small dividend yield of 0.42%, and here is a quick look at the income statement. You can see revenue growing really nicely, and from the balance sheets you can see number of assets much higher than liabilities, and here is a quick look at their cash flow. So the next holding, I have 0.03 shares in AMD. Over the past month, up by 13.74%, which is really good. In my portfolio overall, up by a big 125%, but that is only a gain of £2.51, and my initial investment was a laughable £2. You could ask why I haven't invested it into it further. That's just because I would rather put my money in ETFs, as I explained before. You can see from the income statements, revenue is high. Here is the balance sheets, great number of assets here, and here's the cash flow. So now I'm going to switch to my Trading 212 ISA and show you what's been going on there. So this is my Trading 212 ISA. You can see that my current portfolio balance is £45,596. If I go down here, I currently have only £36.96 in free funds. You can see that I have maxed out my ISA allowance, and this constitutes of 2 years of maxing out my allowance, so depositing £40,000 of my cash, and the rest is pretty much gain, £5,632.97. Now, if I go into the history, you can see that I have, even in my ISA, been buying and selling stuff, which I don't recommend, but currently I've received a profit realized of £4,137. In terms of dividends, you can see I got paid so far in my ISA £878, mostly from holding the FTSE 250 and then once with the Vanguard All World. Now, in my Trading 212 ISA, I hold just one fund to make my life as simple as possible, and this is here. This is in the Vanguard FTSE All World. You can see I actually only bought this at the 1st of July, so I've only held it for less than a couple of weeks. You can see that over the past month, it has been doing incredibly well, up by 1.63%. So you can see unrealized I have a profit of 0.82%, and that is a return of £370. Obviously, of course, the more you have invested, the more your small percentages will matter. That is why, as a human, I get so tempted to, try to sell out and try to time the market, because 1% on 45,000 is really nice. It's £450 and it just feels like an easy 450, and I get so excited. But you can see, in the short term, there is always fluctuation, and it really is pretty much impossible to get right time in the market time after time. So make sure to check out some of my other videos, and I'll see you in the next video.